For a long time here in AgriView, we've been talking about the need for South Africa to deepen its agricultural exports to a range of countries. And I would say at a political level, it does seem like there's a lot of movement, and certainly October 2025 started with that particular focus. I mean, think of it. The Minister of Agriculture in South Africa, Mr. John Steenhuisen, went out to China, and one of the big things that he came back with was that he has signed a protocol agreement for stone fruits. And this includes peaches, nectarine, plums, prunes, a whole range of stone fruit. And now China is an important market because firstly, it is big and it's growing, the population and the incomes remain fairly stable. When you think about the agricultural imports in China, they import a year just over 200 billion US dollars of products. So certainly as South Africa, an agricultural exporter, you want to participate in China and participate in a big way. And I think that starting off by signing all of these protocol agreements, at the start, it does open up the market for us, at least on the phytosanitary barrier side, easing up and making sure that our products could be listed in China, be available around for anyone that is looking for them. But of course, there's another conversation to have with China, which is around the tariffs. And I know that we all obsess and talk about the United States, which is important, and its tariffs, which we all hope that they will be lowered for South Africa. As we are talking now, we're still currently facing around 30% tariff on entering the US market. But the US is not alone in the issues of tariff. China certainly has some of the highest tariffs that South African agricultural exporters have been facing for some time. I mean, think of it. If you're a macadamia farmer in Mpumalanga province of South Africa, you're probably facing around 12% tariffs in China. And if you're selling wine, you are facing between 14 and 20% tariffs in China, and for a whole range of other products. So as big and as promising that market is, we do need to have a conversation about them lowering the tariff for a range of products. And I know that in the previous segments, we looked at China's offer for the African continent, where they said, look, we want to remove all tariff for a whole range of goods from the African continent, and certainly South Africa is one of those countries that they had included in that list. But of course, we know that at some point, this will lead to some bit of reciprocity, where China will say, look, you've been experiencing all of this market access on our side. Perhaps we would like to send something to South Africa. And South Africa has to look at those things much more closely. So all in all, we do also have a skin in the game on figuring out how we engage with China on lowering those tariffs. There is something that we ought to give at some point in order for us to continue to enjoy the Chinese market. But the fact that for agriculture, we are starting to see all of these protocols and the momentum heating up on making sure that we have a constructive relationship in terms of trade with China is something that we all embrace. Because at the moment, as big as the Chinese market is, we play a very minimal role. We still account for about, 0.4% in the Chinese markets, as big as it is. And the key products that we send there, of course, include wool, red meat, citrus, and a few others. But if we can then see the tariffs lowered, resolve all of the non-tariff barriers, we think that South Africa could participate in a massive way there. And this, again, will not be switching products that were typically sent to the United States. We are seeing more and more expansion in the South African agricultural production. And the only way South Africa can ensure that the farmers remain profitable and sustainable is by ensuring that we have access to a range of markets. And China is one of those that can accommodate all of these new products that will be coming out of farms in South Africa. And this also, by the way, links even with the whole discussion around transformation, inclusivity, because ultimately you are talking about increasing the participation and by virtue of that, increasing the output. And that output must be sent to an export market. And it doesn't need to be a product of that particular farmer that goes to China. But what we need is to ensure that South African volume that is available for our domestic market is relatively stable to maintain profitability, and any new large supplies that we produce, they can go to other markets. If it's the already established farmer's product that goes to China, that's fantastic, because then it creates space for the new entrant farmer that can participate in the South African market. So on balance, this is a positive story. So continuing to talk to China and clearing all of these non-tariff barriers is one of those big things that I think is positive for South African agriculture in October 2025. But it doesn't end there. The conversation about the Asian markets continues, because right after that, we know that the South African president went to Indonesia, Vietnam and Malaysia, visiting there. And of course, those conversations involved a whole range of things. They do involve the program of investment promotion, of saying, can these countries invest in South Africa in a whole range of sectors where we see possibilities. But at the same time, they also include the discussions about exports. And I'm looking here at one of the work that we did on Indonesia. And Indonesia is an exciting market. As South Africa, at this moment, we're not really participating much on that. And in fact, I'm looking at the numbers now. We only send about 39 million US dollars products to Indonesia. That's about 0.3% of our overall exports to the world. But Indonesia buys quite a lot from the world market, because they spend just under 30 billion US dollars each year importing food products from the world. So you have China, over 200 billion US dollars. You have Indonesia, just under 30 billion US dollars. So those are all big markets in the Asian region. And if we can continue to increase our participation also in Indonesia, I think we could sit in a fairly good position. Because if you ask me who is participating in all of these markets, I'm looking at the countries here. For example, on the China side, we have a whole range of countries, the EU, Australia, the UK, the US, South Americans, they are participating there. And it's the same countries, again, when you are looking at Indonesia. And what separates them from us is the fact that some of them do have free trade agreements with these countries. Others have negotiated some form of partnership of ensuring that at least their farmers and their manufacturers, they can access these Asian markets at a fairly lower tariff levels, which then increases the competitiveness of their products in those markets. And I certainly think that in Indonesia, South Africa should actually be looking on that. Because if you look at the list of the products, both China as well as Indonesia that buy, I mean, there's grains there, maize, soybeans and all, but also there's a whole range of fruits that they import. There's beef that they import. These are the products that South Africa produces in surplus, and we are always eager to put into the world market, as well as wine. And I think if you think about Vietnam, it's also one of those countries. We already send a lot of maize to Vietnam and South Africa, but I think our ambition is not only to end on maize. We want to send a whole basket of fruits, because the horticultural sub-sector in South Africa is very important, because we always think about agriculture as well as its potential as a sector that can bring much needed employment in rural South Africa. And if you think about the subsectors that are actually labor intensive, they are the fruit as well as the vegetables. And these are also the subsectors where, if you think about value terms, you get a lot of value in these. So possibly higher wages, greater value, and also just more vibrancy in rural South Africa. And I think if we open up as many export markets for them, then we would be on the right path. And this is not a new idea that we are coming up with from now. I mean, those of you that have read Chapter 6 in the National Development Plan, which was published in 2012, one of the key things that it talks about is exactly this, of saying, let's expand the labor-intensive subsectors of our agricultural sector. So this export discussion is taking shape. But I think in addition to the political discussions, the visibility that all of these visits present to South Africa, we have to look internally and be honest with ourselves. And one of the points that we must be honest about is that we've opened a lot of markets for the agricultural sector in the early 2000s. And back then, the DTIC had a certain skill set. Some of those people have retired. Others went on to be academics. We no longer have the deep expertise on trade negotiations like we had in the past. And I think that as the political leadership takes shape, presents all of this visibility, opens up all of these rooms and doors for negotiations, we must continuously beef up our capabilities as South Africa so that we can negotiate with many countries at the same time and ensure that we are negotiating for the better good of South African producers. And we can do this by ensuring that we lean on the academics, we lean on private sector, but of course, the government has to be the one that is leading the way. Others can provide all of the support that is needed. Because ultimately, this is about Team South Africa and SA Inc. products that we're being put out in the market. So visibility is there. All of the exporters that go out in these expos and showcase the products, good stuff, but then the skill set to negotiate for better terms of our tariffs is something that is needed. So, and I think this conversation and all of these visits in the Asian region, it must not end there. We need this to continue in the Middle East because the Middle East is another area that we see as very attractive when we are thinking about the export potential in South Africa. And this, again, is not a switch from what is existing. I mean, think about it. The EU is very important to the sustainability of our agricultural sector. The African continent is an anchor. And in fact, I always think that when we think about exports, we have to go back. I know it's old-fashioned, but I think that butterfly strategy of saying we are rooted in Africa, and then we do look to the West, we look in the East, we look in the northern regions to say where are the exports and the possibilities, but still starting from the African continent where we are rooted at. And I think there's no sector that symbolizes that like agriculture, because almost half of our agriculture exports are to the African continent. And then from the African continent, we have all of these regions that we've already been prospering on, and we need to make sure that we sustain that while we are opening up all of these new markets. So October 2025, fairly a good and a positive start on this export diversification conversation in South Africa. But folks, let me end there for this week. And as always, we are grateful for your support and you spending time to watch this. And we encourage you to share these videos widely to as many people as you can that you think can actually benefit for some of the conversations that we are having as AgriView. And yes, please subscribe to our channel and continue to follow us. We drop new episodes every Thursday. Thanks for watching.